Good morning, everybody. Happy Monday. It's January 29th, 2024. Great to be with all of you this morning. My name is Bob Lang, and I run explosiveoptions.net. Here's my assistant, Tony, right behind me. Tony boy, hello. He is here to welcome all of you to a great trading week. Of course, we have just a few more days. Hang on, Tony. We have a few more days to the end of January. Monday, Tuesday, Wednesday, and all of a sudden it's February. Hard to believe, right? It seems like the new year just started. We get February trading on Thursday and Friday, but that's not it. We also have a Fed meeting, which starts tomorrow and winds up on Wednesday with a press conference and a monetary policy decision at the end of the day on 2 o'clock in the afternoon on Wednesday. We have a huge earnings week coming up with Apple and Amazon. Tomorrow we have Alphabet and Microsoft, along with AMD, Starbucks. Thursday, the aforementioned Apple, Amazon, Meta, Team Atlassian. And then Friday, we wrap it all up with some big oil names and AbbVie with ExxonMobil, Chevron, Cigna, Regeneron, Charter, SIBO. You name it. It's a huge week of earnings. And then to put the cherry on top of that Sunday, we have the employment report coming out on Friday. And we have a lot of employment data coming out earlier in the week, along with the ISM data and a few other very key economic data pieces. But last week was a big week in terms of economic data. We saw the Q4 of 2023 GDP estimate came in at 3.3%, but more importantly, the price index much lower than many expected at 1.5%, which is about half of what it was the prior quarter. So that's good news on the inflation front. When we hear about good news, remember something, keep focused here. When we see and hear good news and data coming out on the inflation front, it means the Fed is more likely to turn and pivot towards a dovish policy down the road. Now, that doesn't mean immediate rate cuts right away. And there's a lot of people out there, a lot of people out in the marketplace. In fact, if you look at Fed Funds Futures, they're thinking that every single positive data point on inflation means, okay, that's another rate cut coming in, right? I think the Fed Funds Futures are predicting about 5 rate cuts in 2024. It's just not going to happen that way. The Fed, in their last meeting in December, if you remember the projections, predicting about 2.5 rate cuts in 2024. So there's a huge divide between what the market thinks is going to happen with interest rates versus what the Fed believes is going to happen with interest rates. So 2.5 versus 5. So at some point in time, that's going to get reconciled. It's going to come together. And I'm going to err on the side of listening to the Fed as opposed to listening to the markets in this particular case. I don't think the Fed is going to let the market lead them into making policy decisions and possibly a policy mistake if they cut interest rates too quickly. I think they're going to err on the side of caution, err on the side of conservatism, and let the data tell them what to do. But certainly last week's data, and maybe even later on this week, some data is very positive towards that end. So I want to share with you just a couple of charts here. And again, I apologize for getting started a little bit late this morning, but we do have a lot of things going on. This chart here, we do see S&P Futures are down a little bit this morning. Nasdaq up a bit. Dow down a little bit, 25 points. So we do have a little bit of a mixed market right now. Here's a chart that I show you from time to time. This is the NYHL, or the new highs, new lows on the New York Stock Exchange, right? So we've seen some instances, especially back in December, when we saw some large ticks on this indicator up towards the 300-400 range. We're not quite up there right now, but we have seen some healthy prints above 100 on the new highs versus new lows, and that is enough to keep a buy signal on this indicator. So that's something very, very positive here for the markets. Keep in mind that even though the daily breadth numbers may not be good, if we're still achieving new highs versus new lows, that is a positive, at least on the interim intermediate time frame for markets. So we have had some squishy numbers in the breath for the past couple of weeks. I'll even show you that right now. As you can see up here in the top left, this is the VOL, the volume distribution, and also the ADD line. And you can see that these numbers have not been extremely positive. We had a couple of good high readings there, but then we had a high reading last Wednesday and it came down and fell. And then on Thursday and Friday, we started a high and started coming back down. So this is the ADD, which is advanced decliners, an accumulation of those numbers. So this is the indicators, internal indicators that I follow every single day. So back to this one again. So this is again, this is still on a buy signal right now. Oscillators, I want to show you that too. So this is a reading here of the New York Stock Exchange and the Nasdaq McClellan oscillator. You can see right in the middle over here. And the New York Stock Exchange oscillator went positive on Thursday and followed through on Friday. The Nasdaq is almost positive. It's at minus 4. So if this gets into the positive today, this is on a buy signal right here. Look, we're heading into a seasonally strong period right now for the markets, at least in the short term, right? So what does that mean? Well, my good friend Larry McMillan, who runs the optionstrategist.com, take a look at him when you get a chance, put out a trade here on Friday. And I've been following Larry for years, more about a dozen years. Larry and I have known each other and been friends. So Larry put out what's called the January end of month seasonal bullish trade, and it's got an enormously strong track record. Now, I put this out at the end of the day on Friday. The trade will last until Thursday. So what's basically this is all about is the next 4 to 5 days generally line up to be bullish, right? And again, we've already covered the fact that there's a lot of things going on with the job employment report, the Fed meeting, and a lot of earnings coming out. Regardless of all that stuff, the historical seasonal trends are still in favor of the bulls in this trade, because you can see, look, historically over the past 38 years, 30 wins, 8 losses. And the last 2 years actually were very strong. Actually, in 2022, the seasonal trend saw a 6.1% move up in the S&P 500. Last year was 2.7%. So what do those numbers mean to you, right? Well, the average win actually is 1%. So what does that mean to you? In about 4 days, what is 1% of the S&P 500? It's almost 50 handles, right? A little bit more than 50 handles. 6.7% would have been about 350 handles. So that was a huge move in 2022. Even 2.7% during that week was a huge amount. It was probably about today in today's S&P 500 at 5,000 roughly. It would be about 100 and almost 140 S&P 500 points. So playing the SPY for a short period of time is a good bet on this track record here, right? And you can see the historical returns since 1986, and of course back in the 90s, this was a really great strong indicator. Almost like every year for about 10 years in a row, the S&P 500 was up during this 4 to 5 day January seasonal period. So more mixed numbers over the past last 10 years. 1, 2, 3, 4 down, 6 up, but still positive, right? Still in the positive realm. So that's a good trade you might want to take a look at. As I mentioned earlier, we do have a lot of earnings reports coming out this week, and I have a couple of them on my radar screen. I'm looking at a name like Meta this morning. It is overbought. It is overdone, and options are very expensive here, but I'm still looking at this one as well. I'm looking at ExxonMobil. This one got really beaten up recently, but has come back nicely and is up above 103, which was above the 50-day moving average. And you can see on Friday it had a strong follow-through day from Thursday's big move up. I'm also looking at Microsoft, which it looks like it's up a little bit in the pre-market. They have earnings coming out tomorrow night as well too. This is a very strong chart, making higher highs and higher lows. I think this can get up into the 420s before too long. And then Boeing is one that's been it has had a lot of trouble. And I'm watching this 200-day and this 100-day moving average very, very closely. Now we're talking about the 200 days about 214, the 100 days about 213, literally right on top of each other. So if we can get above there, it's going to cause a good short squeeze and make a run towards filling a couple of these gaps. But listen, you know what? The troubles have been notable and noticeable and notable on Boeing for the past few weeks with their Max 737 airplane. I think they're back in the air now, but certainly something that we need to be aware of. And the stock has been in a severe downtrend for the past month and a half. It's had a terrible month of January. You can see that we started at 260, we're down at 205. So it's clearly been the worst performer in the Dow Industrial since the start of the year. I'm also looking at Qualcomm, which is another name that has earnings out, and that'll be out on Wednesday night. Again, it had pulled down a little bit on Thursday and Friday, which is fine by me. I like to see them pull back a little bit before earnings come out. And then finally, MasterCard, which had a huge day on Friday, huge reversal day. Visa came out with their earnings on Thursday night. American Express, huge day for American Express. We had some calls on this one from Thursday night, and I made more than a 200% gainer on this one. That was a good one. So I think MasterCard is going to come out with some good earnings on Wednesday morning, and shoot higher. So we'll see what happens there. And then finally, well, today we've got Supermicro. A lot of you remember that last Monday that Supermicro had a great day. SMCI. This is another AI featured name. And then Regeneron on Friday morning is another one I've got my eye on. And then Phillips 66 PSX had a great day last week on some really heavy volume and broke out to a new high of $140. They have earnings coming out on Wednesday morning. This is a name that I've been on for a while and have some good profits on the name, and so hopefully we'll be looking at the stock maybe moving up towards the 150 range in the short term. So that's it, everyone. I'm going to cut it there. Thank you very much for listening today. Don't forget, also another big event coming up on Wednesday afternoon. Okay, Wednesday afternoon. Pay attention. It's the intro to spread trading with Sam DeMarco and myself. We're going to be talking about spread trading, giving you some good information about what it is, the applications to use for spread trading, why we use it, how you can make money with the least amount of risk that you possibly can put on a trade and still participate in a directional move, or maybe just a calendar move. Lots of things to cover on this webinar. In fact, there's so much stuff to cover in the webinar, we're going to have to do another one in February, and we have another one scheduled for February 28th as well too. So it's important that you spend a little bit of time if you're really interested about spread trading, about what we're doing. Sam made about a 20% gain in 2023 with about 1/3 the risk of the S&P 500. Okay, 1/3 the risk. If somebody was going to tell you you could earn 20% with 1/3 the risk, and of course the S&P 500 was up about 22% in 2023, with a risk that was 2.5 times, two times more than the spread trader that Sam is running. Okay, if you could earn that kind of money with substantially less risk, I'm sure most everybody would raise their hands and say, yeah, include me. I certainly would like that. I'd like to be able to tell people, yeah, you know what, I'm earning a nice huge return, but I'm taking very little risk. Because remember, at the end of the day, all of us are risk averse as investors, right? We want to get as much return as we possibly can, but risk little in terms of loss down the road. So Sam is doing that. His losses are very minimal, if anything at all, but the gains are substantial. So that's what you like to have. You want to have small amount of losses, substantial gains. And that's just what spread trader is all about. And that's what Sam was doing last year. And he's going to continue doing it for the foreseeable future. And so we're really, really excited about 2024. He's going to have I think he's going to have an amazing year. So this is a chance for you to listen to him and hear what he's talking about, learn from him and learn from me on the spread trader. So find out, I'm put it out on social media. I put out a lot of links out there. Go to the website, explosiveoptions.net. In fact, I'll show it to you right now. You can go right here. It's very easy to go. Go to explosiveoptions.net and click on Trading Insights. Scroll down to Webinars. Go all the way down to the bottom, and you can see January 31st, Options Trading Webinar, Intro to Spread Trader. Click on Register. Put your name, email, hit submit, and you're in. And you'll get an email reminder on Wednesday before the webinar to show up. Okay. All right, everyone. Thank you very much for spending a little time with me, and I look forward to seeing you all on Wednesday in the webinar. Keep it real tight today. Keep some protection on. As always, it's going to be a lot of volatility in the markets this week, so be aware of that. There's probably going to be some window dressing at some point in time for the end of January. I often see that. Maybe it might start today into tomorrow and Wednesday. Again, a lot of earnings coming out over the next, spilling out over the next 4 or 5 days, and we'll be ready for that. I hope all of you guys are too. So have a great day, and I'll see you guys all back on Thursday morning. Enjoy the Moody Blues. Take care. Bye.
Take a bow, just your fears, it's easy now. Understand the voice within.